If you served, even for a short period, your VA home loan could be one of the most powerful financial tools you'll ever use. And the rules for 2026 make this benefit even more valuable if you know how to use it strategically. Today, I'm breaking down what the VA loan actually is, what makes it so powerful, and what's changing for 2026. The VA home loan isn't free money or a government loan. It's a common misconception that the VA loan comes from the Department of Veterans Affairs, but it doesn't. It's a mortgage product guaranteed by the Department of Veterans Affairs. Many lenders can provide VA loans, and here's what makes the VA home loan product different from every other loan type in the country. One, it's actually zero down payment, legitimately zero, not rolled in or deferred. Yes, you can choose to do a down payment, but it's not required as long as you have enough eligibility. Two, there's no monthly mortgage insurance. This saves you hundreds per month compared to FHA and low down payment conventional loans. Three, it has more flexible credit and debt to income guidelines. Four, it's lower than average interest rates, in most cases lower than both FHA and conventional loans. Four, the ability to buy again and again as long as your entitlement is available. And you have less penalties for distressed sales if you get into a tight spot and can't afford your mortgage and aren't able to sell for enough. You can do a short sale without having to carry forward payments and with less impact because of that VA loan guarantee. So it's a much lower risk home buying option. For most service members and veterans, the VA loan is the safest, fastest, and smartest path to home ownership, building equity, and developing wealth. Let's clear up a big misconception. If you have your full VA entitlement available, there's no official VA loan limit. What does matter is your lender's approval amount based on income, debts, and your own credit. But here's where it gets interesting. You can use the VA loan more than once. You can have multiple VA loans at the same time under a single person's entitlement if the numbers support it. This is how many military families buy at one duty station PCS, then buy again at the next. If you've used part of your entitlement before, the VA does apply county level limits to whatever entitlement remains. But if your new purchase would put you over the limit, there's a formula for a down payment that is much less than the difference between your purchase price and your remaining entitlement. And most of the time, that is still lower than any other loan option. And your monthly payments would be lower without the mortgage insurance, which is also referred to as PMI. Plus, your full entitlement resets once your previous VA loan is paid off or restored. When cycling multiple properties, once you have equity, you can refinance into a conventional loan to free up your VA loan again. The main point is there's a lot of flexibility to keep your out-of-pocket costs very low while building up properties and future income opportunities. Now, here are real confirmed changes to the VA loan heading into 2026. I'm Julie Calza, leader of the CalzaCo Team, Arizona's #1 choice for VA home loan buyers and sellers for nearly a decade, and ranked in the top 0.005% of real estate professionals nationwide. My team has helped thousands of service members, veterans, and their families navigate the VA loan with confidence. Now, here are real confirmed changes to the VA loan heading into 2026. One, county limits have increased, giving you more room in your potential buying power. You still have to be able to qualify, but as long as you can qualify for the amount, you have more room for the loan amount you want or room for more than one property in the entitlement. For 2026 buyers, this translates into more buying power without needing a down payment or a jumbo conventional loan. Two, funding fees were already reduced in 2024, and those reductions remain in effect through 2031, making the VA loan more affordable for most buyers. This means 2026 VA buyers are still benefiting from lower upfront costs compared to pre-2024 levels. The VA loan has improved the certificate of eligibility process, and lenders now receive automated COE approvals more quickly than ever. This means faster pre-approvals, cleaner contracts, and stronger negotiating power for VA buyers. And four, lastly, the VA continues reinforcing guidelines for borrowers who PCS and keep their previous VA-backed home, want to buy another home using remaining entitlement, and need to restore entitlement after selling. For 2026, this remains one of the most flexible and supportive loan programs in the country. If you've been waiting for the perfect time, here's the truth. The sooner you start using the VA home loan benefit, the faster you build equity and maximize that entitlement. With lower funding fees still in place, strong lender support, and no VA-imposed limits on your buying power, 2026 is shaping up to be one of the strongest years we've seen for VA buyers. The sooner you start using the VA home loan benefit, the better your chances of maximizing it are. Want to see what the VA home loan can do for you in 2026? Reach out today.